Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. SolarEdge got absolutely hammered on Wednesday after reporting second quarter 2023 financial results. This is another residential solar company that reported weak results, but they were a little bit surprising for investors and then maybe worse than a lot of people were expecting. I think the ultimate concern is that a lot of the pressure that started to hit in the second quarter is going to persist for the foreseeable future. So I want to dig into the numbers today and then talk about what I see going forward. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like this video, check out my newsletter, Asymmetric Investing, in the show notes. Let's go straight to some of the highlights from the quarter. This is a few of the highlights for the quarter. And to be honest, the second quarter was not all that bad. Revenue, $991 million. Net income, $119.5 million. Total cash, net of debt, $853.5 million. All these things are pretty good, but if we look at the trends going forward, that's where things get a little bit concerning. So I'll go through a few numbers here. This is the guidance for the third quarter. Now, revenue is expected to drop to $880 to $920 million. And non-GAAP gross margin down to 28 to 31%. So the trend here is that revenue is going to be lower and margins are going to be lower. I think that's the thing to keep in mind, is that both of those things are under pressure right now. On top of that, we have already seen that inverter sales have basically flatlined and power optimizer sales are starting to decline. Now, the challenge for SolarEdge is that they're not actually installing any of these products in the field. What they're doing is working through installers. And so what we have seen from SunPower, from Enphase, is that there has been less sell-through, so sales to the end customer, actual installations, than there has been sales into the market, into those installers. So inventory has been building at installers. As a result, as they correct for their expected demand in the second half of the year, they're going to order less product in the third quarter and the fourth quarter. That's why we're seeing weak guidance for the third quarter for a company like SolarEdge. And you can see that demand was already down. So this is a pretty big concern, because I think power optimizer, this is something where this is the module level power electronics competing against microinverters. There was a lot of tailwinds behind these markets for years because they were mandated in a lot of areas. But now that same growth, that same tailwind is not behind the company. Now they got to expand into other products like inverters, like energy storage. That's going to be much more challenging. And we've seen that growth has started to slow on the inverter side. If we take that guidance of $115 to $135 million in non-GAAP operating income, you can see that's going to be lower than we had in Q3 2022. So a big drop from what we've seen over the past couple of years. Now investors are starting to consider, is this stock too expensive? If revenue is not going to be growing, if margins are not going to be going up, is it time to just bail on the stock? And the answer, at least for today, was yes. With a company like SolarEdge, you really have to understand what's going on across the industry to understand what its financials are going to do in the future. If the solar industry overall is growing, if there's mandates for the kinds of products that it's making, like power optimizers, then it's going to be able to grow. Right now, some of those trends are moving in the wrong direction. And I think that's what's concerning long term. As interest rates have risen, it's made it more difficult for installers to finance their projects, whether they're doing that with leases or loans. It's just made it more expensive to finance that solar installation over a long period of time. The result is that there's less demand, less growth in the end markets. And what those installers are going to end up doing is put pressure on their suppliers, like SolarEdge, to say, hey, we need better prices and lower prices to be able to make any money and actually grow installations. So what do you do if you're SolarEdge? Do you lower your prices to try to increase volumes? Do you just say, well, volumes are going to drop, but we're going to keep our margins extremely high? Maybe then your competitors start to lower prices. This is something we've seen in the solar industry before, specifically in the solar panel market, where there was a ton of growth during the 2010s, but the competition was so fierce that a lot of companies were competing based on price. I think that's ultimately the fear right now, is that SolarEdge is still a company that's priced like a growth stock, but we may be seeing the end of this high growth phase and now start to enter more of a commodity product phase. I've been talking about this for a while on this channel. It's one of the reasons that I've avoided Enphase and SolarEdge, is that I just don't see them being this high margin, high growth business long term. They had a lot of tailwinds behind them, like I mentioned, But now they're starting to face a market that's much more competitive. As installers face pressure, they're going to put pressure on companies like SolarEdge. And I wonder if lower cost options from China, from Asia, are going to start taking market share as a result. That would be the worst news for SolarEdge, but that's not quite what we're seeing yet. What I see is not a great quarter, but it was not a great quarter across the board for the solar industry, and a lot of dynamics to think about. So I'll be following this over the next few quarters to see if we end up seeing growth starting in 2024. But right now, investors do not like what they see with SolarEdge. But what did you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.